Welcome to the Capital Discussions Roundtable. I'm Tom Nunnermaker with my guest Bruno Voisin. Bruno's going to be talking about his Rhino trade, but before we get started, just a quick disclaimer that Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And again, this is for educational purposes only. So with that, I'm going to stop sharing. Bruno, I'm going to give you the presenter role. And while you're switching to share your screen, just want to welcome you to the roundtable. For those who don't know, Bruno and I, we go back probably 10 or 15 years. We've known each other a long, long time. And I have the utmost respect for Bruno, very clever guy, awesome in math, so is his son. But lots of programming, trading, Bruno does it all. So welcome, Bruno, and look forward to seeing your version of the Rhino trade.
Thanks, Tom. So can I share my screen now?
Yes, you can.
Okay, whereabouts? Oh, yeah, okay.
Should be the same place.
Yeah, quick start. Share my screen. There you go.
And it's still coming up, and now we see it.
Okay, great. Well, good morning or good afternoon, everyone. I'm today presenting the baby Rhino after trading the big daddy Rhino for a while, thanks to Brian. I mean, that trade really speaks to me, and I wanted to make a weekly version of it, probably more for the fun of it, and it came out as a good trade. And so Brian recently decided to stop the alert service for the Rhino, and Tom and I were discussing whether I could take over the trademark, and I thought for a while I would call it differently. And this is the picture of Cape Town, where, I mean, I'm French, but also partly South African. And that's the lion's heads in Cape Town. I mean, Cape Town is better known for its Table Mountain, but I thought this could look almost like a rhino shape. Okay, so today I'm going to be talking about the baby Rhino. Of course, it's always a difficulty for me to pitch at the right level. So it should be pretty easy, accessible to beginners or near beginners. But of course, it's better to have some understanding of the Greeks and the butterflies. And since I will be talking about variations from the regular Rhino, so it's better to have some at least some view, some experience with it. This is me. As Tom said, I've got a pretty long trading experience as a quant. I've traded about everything except money markets and bonds, maybe. But stocks, ETFs, futures, and actually options were probably my first love as far trading is concerned in the mid-90s, where it was still a little bit difficult at the beginning of the electronic markets. And still today, I'm still a quant at heart, and I'm still actually developing a swing system on US indices. If not a disclaimer, but a caveat or something that I believe is very important for most strategies, and in particular this one, is that, of course, this strategy comes from the Rhino, but it's a excuse me, I was disturbed for a minute. This strategy comes from the Rhino, but as I've actually translated it into a weekly, I have actually put a lot of my own type of trading. It's a very discretionary trading style, so it may appear as freestyle for some. So, but I'll try and be as clear as possible, and I think the point is to actually show how I trade it, and there will be questions, of course, at the end if it's not clear for some. And lastly, since Brian actually stopped the Rhino alert service, I'll be taking over the monthly Rhino probably as soon as this month for the September maturity. It's a trade I'm actually preparing to enter this week. I was meant to enter it probably a couple of weeks ago, but with the market keeping going up, and to be honest, I was also on holiday, so I just wanted to switch off for a while. So weekly options in general, I find that it's less stressful because if you lose on a week, you know, there's always a week coming up, another week coming up. So whereas if you take it as really like income trading, it's always bad news to lose money for a month and wait for the following one. I mean, some people may not be patient enough. I see a question from Andrew, but maybe we can look at it later if you don't mind. Of course, it's faster, it's more time consuming. You will see the P&L moving up and down more drastically than for a monthly. And obviously, because it moves faster, it may be more difficult for beginners to execute orders properly. But we will come to that as well. What is typical of weekly options trading is that we look at all Greeks, but it's essentially a theta trade. We're here to capture theta. We don't want to be too complicated in our heads with the modeling, so we want to be under the tent if possible. And we look at theta, and how it accelerates towards the end of the trade. So because the options modeling, the Black-Scholes and its later variations, have a lot of interconnections between the Greeks, the best way to capture theta is to try and neutralize the other Greeks, basically be delta neutral, but also as vega neutral as possible. And that's why I came up with two simple rules. And if it was like really kind of a freestyle Rhino, the essential thing to keep in mind is just to keep the Greek ratios as small as possible. But obviously, if you keep them too tight, you will be tempted to overtrade. So it is a reasonable ratio. We will have a look at it right now. So probably quite trivial to most of you. I mean, when you come closer to expiration, the theta accelerates, and more so for the at the money options. In the money and out the money options have a more linear. I see TMI, too much information. It's actually a well-known emoticon on Skype and other messengers. I see. I've written here that gamma is a byproduct of theta, as you all know, but we are not too concerned about gamma because we generally don't go into the expiration week. But when you trade the baby Rhino, you will definitely experience the acceleration of theta towards the end, where I will come back to it right now. So why the baby Rhino? Because I think a lot of us, and I speak for the 200 and so people on the Skype group, and probably a lot also on the Capital Discussions Forum. So we are, most of us, quite familiar with the broken wing butterflies, and the Rhino being, to me, quite solid. I decided to kind of replicate it for a weekly position. The strengths and weaknesses are well known. I mean, it's fairly lenient on the upside, but of course we have to be careful because it's very often where you end up losing money, and it is obviously a little more risky than a typical bearish butterfly. because of that the expiration line being further up on the upside. After trading the baby Rhino for quite a while, I think it must be almost like half a year, so 20 odd weeks. I have actually seen that I look at the well, I call it the Big Daddy Rhino, but I mean the regular Rhino a little differently. Not that I can apply the ratios, but the freestyle maybe not the word I should be using, but the variety of adjustments is quite often applicable to the monthly Rhino. So the baby Rhino I trade on the rut. I am pretty sure it can be used on the SPX. The reason is that I have actually not traded the regular Rhino on the SPX yet. I'm very familiar with the rut. There's no reason why it wouldn't work on SPX with probably different margin calculations, margin requirements. So I placed 3 broken wing butterflies, 40-30, slightly bearish. So I'll put the upper longs just a little bit OTM, probably 5-10 points. It can be noted that there's nothing wrong with using a regular Rhino 50-40 like the monthly one. Actually, it will probably be a good way to start off with it, even though it will require a little bit more margin. And as we go along and we understand what's inside the Rhino, you will notice that it's actually quite possible to evolve it into a different beast, make it unbalanced, maybe having a larger put credit spread than the debit spread. So we will look at a few examples later. As far as the hedge is concerned, like the normal Rhino, I use a call calendar. The reason is that being so close to expiration, delta increases quite a lot. So whereas with the monthly Rhino, if you start far out, like 60, 70 days DTE, you can usually start with a broken wing butterfly and add the hedge later on. In this instance, it's not possible. I mean, especially at the moment where the IV is so low, we start with a pretty steep delta. So, but at the same time, I keep the hedge as a hedge. Basically, you can make money on the calendars, but that's not exactly the point. There's only one situation where and actually it's a situation that could be applicable at the moment, when it's a very low IV environment. You can keep your flies and add or even roll your hedges and start making money on the upside, especially if the market runs away, and make money on the calendars. It's easier to make money on calendars when the IV is low. In any case, but the reason why I said max 3 is that again, I want to make money on the butterfly and not really on the hedge. The hedge is here to provide particularly a Vega hedge, nothing else than that. As I said before, the way I look at the overall combo is actually decomposed, piecemeal. And actually probably even more than just a broken wing butterfly and a Vega hedge in the form of calendars, but even maybe down to 2 spreads, 2 put spreads, a credit spread and a debit spread, and the hedge on top. The capital requirement is pretty low. I've placed it to 10K because when I started trading the baby Rhino, I realized that you may need up to 10K and maybe sometimes exceed it if you don't manage your upside well. If you have to keep on adding hedges and basically you start trading the calendars more on the fly, you will use more money. I think it's important, obviously, to keep a capital, a planned capital, as stable as possible, and that forces you to not to keep on hedging, keep on going up, and maybe look at other ways to deal with the upside. As I said, the essential guidelines is to keep it as a Theta trade and to keep the two ratios in check. Delta of a Theta 20-25%, and that's wrong. It's not gamma. It's Vega. Sorry, Vega of a Theta under 50%. I will correct it when I give Tom this presentation. Maybe more than the regular Rhino, it's good to have a market view. It's not essential to be 100% correct, because as we keep Delta as neutral as possible, there's room for adjustments. There's room for correcting maybe some mistakes. And I will show you an example where I probably had the wrong view and I managed to square off and make a little money. Overall, it's an easy trade, which is quite rewarding, because it's pretty easy to make money. I've put a little caveat here, because for people who are beginners, you can maybe lose a little bit more on a position that makes 0.5% theoretically on option view or one. You all know that maybe you will probably end up barely break even or even lose a little bit if you don't have your orders executed properly. On average, you will make 2-3%. That's what $200-300 on the $10,000 capital. I usually put a profit target at 5%. Personally, I don't use fixed stop losses, but I think 5% is a good measure. Actually, if you trade it correctly, you will probably never get to that. So here's a typical Rhino at inception. I've got my 3 broken wing butterflies. You can see, I don't know whether, I'm not very good with using annotation, but maybe you can see my mouse here, little pointer. So you see that it's slightly under the tent.
Hey Bruno, I still see your PowerPoint.
Yes.
Are you showing a screenshot or your PowerPoint?
No, I'm just moving the mouse but I don't know whether you can see the mouse.
Looks like it's frozen.
Oh.
Are you on the performance of a baby rhino slide or something else?
No, I'm on slide 11.
Oh, maybe just try stop sharing and reshare it. Maybe that'll fix it.
Okay. If I know how to do that, I will.
Oh
yeah.
Now I see slide 11. Okay. I think we're okay now.
Okay. So you see typical baby rhino at inception. Slide
Yep,
11.
we're seeing it now.
Okay. I don't know what went wrong. Anyway, so now you see that the 3 broken wing butterflies, the 3 flies. In this instance, it's a fairly standard one. So the long puts are just 10 points above the money. The delta is pretty flat over a good range. And when you project over this next 7 days, because I enter it 14 DTE, and I intend closing the position 7 DTE. So every week I look at what it's supposed to be like a week later, and the delta is pretty flat over a good range. If the range is above 1 standard deviation, I'm quite happy. And in this case, plus minus 3%, that should be a pretty good position for the following week. you can see at the bottom of the screen that the delta is in check, good theta, and vega is minimal. Okay. So what do we see on that screen? 2 or 3% profit range on the other side. Is the projection reliable? Reliable, not quite. Calendars, depending on IV, the shape of the calendars may go up or down, but we try not to put too much attention to that. It's basically a Vega hedge and not much more than that. I will show an example later and especially at this time where IV is low, sometimes it's not that easy to build a baby rhino correctly. And we will see that there can be, of course, adjustments during the course of the life of the trade, but maybe at inception we will choose to depart a little from the typical broken wing butterfly sometimes. I will show you right now. So it may look a bit weird, but it's just as weird as the other one with some Vega negative structure on the downside, Vega positive structure on the upside. So it may look like it's not exactly the way we would like things to be, but overall, the drastic reduction in Vega makes it very safe on the downside, and playing around on the upside is not too difficult. So when do I enter? I prepare my trades early Friday, and I'm generally placing my orders around 2 to 3 p.m. On the Friday, I can very often see that money makers release some theta, so they can be sometimes a tiny bit of overlap between the previous one and the current one, exiting and closing, or sometimes you will close the previous one in the morning if you don't want to be too busy with two positions. But roughly, yes, 2 to 3 p.m. is a good time to enter the next one. You can enter it as a broken wing butterfly. I generally find it difficult to be filled, or at least filled as quickly as I would want to. So the alternative is to put a balanced fly and add later a put debit spread to move up the expiration line on the upside. The way I do it, and I know lots of traders are not comfortable with that, is to enter the two spreads separately. Ideally, on a slide down move, I look at the 5-minute charts and I try to enter the put debit spread first because it's going to pick up, it's going to be more expensive. And the put credit spread will, obviously, if the market goes a little down, you will cash in a little bit more. And generally, the put credit spread being further out of the money moves a little bit, slightly slower. As far as management is concerned, I've put 10 a.m. and 2 p.m. To be honest, a weekly trade is a trade for a full-time trader. It is generally feasible on a normal market, but in the last 6 months we've seen the markets going in up and down quite rapidly. So maybe a third check around midday is necessary. But let's say when the markets are behaving normally, two checks a day are enough. And of course, we exit the following Friday. So the way I look at baby rhino, we can look at it from a distance and look at it as a rhino, just slightly smaller for a weekly trade. We can look at it, of course, also as a hedge broken wing butterfly, and that could be hedged in different ways. What I want to get at is that maybe the way I look at it is that for me it's a hedge put credit spread. The reason is that that's where the money is to be made. The rest is almost, is of lesser importance and we will look at that right now. If you look at the metrics for a baby rhino, I think it was last week's actually, and in this case, you will see that I already departed from the rules right at inception with a shorter put debit spread, only 2 strikes up. In this way, it's actually easier to protect on the upside, of course. Obviously, the reverse of this is that it will give you less of a hedge on the downside. But even if I look at a normal broken butterfly for the Rhino, I would have, this is Theta here, -40 to -45 or -42. That's not where the Theta is. Theta is on the put credit spread. I've got 40, I've got 20, I've got 20 Theta coming from the put credit spread. So again, that's what I look at when I enter. So when I entered, it was 14 DT, and obviously here it's 21 DT, where the long leg of the calendar is. I haven't mentioned this in this presentation, but obviously we also look on the calendar side at the market volatility, the implied volatility, and it is possible to so to say buy more Vega by putting your calendar 2 or 3 weeks out, not just the following week. So overall, I wanted to have a recap sheet on the system, but as a matter of fact, this little animal is quite adaptable in many markets. If you have crafted correctly on the Friday, there may be 1 or 2 adjustments. I mean, if you have more than 2 adjustments on the weekly, you probably get it wrong. It's not a no-touch type of trade, but you don't want to be trading actively and adjusting every day either. It's better to have a market view, and if you recall the ratios I've given, it is not necessarily a minus delta at the beginning. You can start neutral or slightly bullish if you wish. As long as you're happy with your projections over the next 7 days, that's okay. I say it's fairly immune to IV environments, yes, because we have a variety of possible adjustments. Having said that, obviously, like most rhinos, most broken wing butterflies, or even butterflies as such, a low IV environment is not the preferred environment, but we can deal with it. Things that I don't like to be, I mean, a position that I don't like to be in is to go past the horns. The money is to be made obviously better under the tent of the fly, or it can be made further up to the calendar, but it's never good to run after the market. So that's maybe one thing I actually even intend to add to the regular monthly Rhino, where the original method let the Rhino unchanged and not rolled back or adjusted, even if the shorts were passed on the downside. On the baby Rhino, and as I said, now even for the regular Rhino, I don't let the market go past. I mean, if you don't do anything and your shorts become in the money, that's no good. Well, the typical adjustments over the life of the Rhino. On the upside, do a reverse Harvey on the upper longs. That's something that takes some stress out of the trade. Your downside will be reduced, and you may even make money from the calendars. Very often I move shorts up or down a little bit. Obviously, this will have an effect on the margin, so there's a limit to what you can do if you want to stay within the 10K planned capital. And something that I do but some of you may not be comfortable, but you can diagonalize, add a calendar or move calendars to play with your Vega hedge, and maybe more than Vega, but also that your calendar will push up a delta. So you can actually find the right combination of delta Vega adjustment by playing around the long or the short leg of the calendar. And that I also do on the regular Rhino now. The margin is going essentially to, I mean, you start with generally half, maybe 2/3 of the plan reg T. So a regular baby Rhino with 3 bracken wing butterflies and a few calendars will use 6 to 7K. That's why, I mean, if you want to stay within the limit of 10K, you will be limited in your calendar hedges on the upside. And that's why maybe to reverse Harvey when it's possible will cost you less, and it will be easier to stay within the limit of your capital. If the market is stable or goes a little down, and you've got some spare capital and you're not too risk adverse, yes, you can actually add another put credit spread. There's nothing wrong with that, and that's exactly where I was getting at the beginning. It is also possible to have an unbalanced fly, maybe with 4 credit spreads for only 3 debit spreads, or 3 and 2. Since I look at the fly as just a combination of 2 spreads, as long as your ratios are in check, there's nothing wrong with playing around with your combo. Or maybe this slide should have been earlier, but that's a recap. Yes, something I've played around a little, and that's something that can be done for beginners actually, is to try and do a teen type of Rhino. It's not as slow as a monthly Rhino. It's not as fast as a baby Rhino, but you can start 4 weeks out if you wish. Something that I also do occasionally is take a chance on the weekend and exit the following Monday for DTE. Something that we could talk about, but that's maybe a little bit off topic. That's something that has been discussed extensively on the Skype group and also on the forums, is the skew sensitivity. Obviously, the spreads are sensitive to skew, but since we keep delta and vega in check, it is not so much an issue for the overall structure. What we see here, if we look at the IV skew, typically at 14 DTE, you will have your puts IV going that way, and it will generally go steeper as you go closer to maturity. So you can actually figure out that obviously the IV will go high on your lower long puts. So that means that you should be making money. I mean, it's actually easier to make money on your put credit spread, because your shorts will kind of deflate, but your lower longs will probably keep the value a little longer. So a recap, because again, what I'm getting at is that it's, to me, even though it's anybody can start trading the baby Rhino as overall structure, it's good to look inside, look at the two spreads, and here you see that your debit spread, you have a minus 67, up to minus 70 delta, so it will rapidly lose money. Your theta is lower than that we will see on the other side, and the vega is 41. So as vega goes up, as IV go up, you will make money, but you will. I mean, as time goes down and vega goes down, you will see that you will lose quicker your on the put debit spread, and conversely, as time passes, you will see obviously your profit going up, but you will be here more Vega negative, so meaning that you will also make money quicker if the Vega goes down. I mean volatility goes down. Again, that's I want to insist on the put credit spread because that's where I believe we make the money. The rest is hedges, so you will lose money on your put debit spread. Maybe you will make a little if you end up under the tent, but sometimes you are outside the tent. And it may not be too worrisome, but you will close the position maybe flat or losing a little bit on your put debit spread. But what's important is to make money on your put credit spread. That's why again, because as I said at the beginning, a strategy is a reflection of its designer. I just want to show you how I look at things, and maybe if you decide to trade the baby rhino, you will look at it in the same way and make it your own over time, and maybe look at things that I don't see. So here the delta is 50, so that's why this, if we looked at the PDS, we were minus 70. That's why we on the broken wing butterfly side of things, we are delta negative, and that's why on this example we will need 2 or 3 calendars to balance out the delta. The Vega is way more negative, and this is also where the margin goes, 10K here. So the big difference between this baby rhino and the big one is that when you, as I said, when you start far out on the monthly rhino, usually you have time to add your hedges if necessary. You may stay with your broken wing butterfly for most of your trade. In this instance, the hedge is there from day one, and you will have to keep it for the life of the trade. If you feel it's too steep and you may be too hedged, you may want to start further out, or you can also obviously skip a week. I mean, nothing wrong with if you're not happy with the market environment, there's nothing wrong with taking a week off and start a week later. When we talk about a fly now decompose into 2 spreads, it may be a split strike butterfly. Basically, it can be just a bull and a bear spread, which are not actually linked by the shorts. I mean, it's also possible. And even though most traders prefer trading a bearish butterfly or broken wing butterfly with negative delta, it's not an absolute necessity. You can be slightly bullish. There's nothing wrong with that. Your ratios will determine what you can do. In any case, if you are outside the tent, there's a chance that you will have less theta, and so the allowance for delta will also be reduced. Let's now have a look at a variation. That's something I put on, I think it was in May for a June expiration. In this instance, like I actually did last week, you may have, in this instance, I actually put 4 credit spreads for 2 debit spreads to be more biased towards the upside. Again, even without a hedge, I am covered plus minus 3% and over 1 standard deviation. My ratios are in check, even though obviously without a Vega hedge, my Vega is little high. So that's a way to start, but you may need to either close that extra put credit spread or add some hedge, Vega hedge, if it doesn't prove to stay nicely in this range, or maybe 1080 to 1110. In any case, as I said, I never let the market go past my shorts. But that shows that there are possible variations. you can certainly have a single horn baby rhino. That's not to me, that's not an issue. Let's look at an example that was April 14 expiration. So a bit like now. It was a little hard because IV was low, actually not as low as today actually, and the market was quite choppy with a upward bias. So what I'm going to do, and I'm going to go to option view, and I'm going to call baby rhino. That's this one. So fourth one. Can you see my screen, or do you have problems?
Screen looks fine, Bruno.
Okay. Okay, so here it was at inception when I started it. I think it was around 2 o'clock. Yes. So delta is in the control. Theta is pretty good. Vega is limited. And if we look, it was like 2 hours after, or maybe let's put it market close. Here is a typical baby rhino. Maybe less hedged and covered on the upside, but pretty confident on the downside. If I go back to PowerPoint, something that you obviously, if you have a market view, or at least you try and figure out whether the market may be going. This is how it looked like in April. I specifically chose a fairly difficult week. I'm not here to show easy examples where obviously it makes money all the time, etc. So it was difficult, and like it is difficult at the moment because IV was pretty low, not extremely low, but you know, IV the ranking 27%. And I took a view, and it was maybe not the right one, that the market would probably go into another cycle. So this is why I chose this type of rhino with a little bit bearish leaning. I saw that there was a kind of a bottom of the last few weeks around 1170, 1180. So if we go back to my if you go back to my structure, I had I saw that I could obviously be in a position where I would have to move back my shorts, but it was safe enough. I was basically making money up to 1080, which was to me a strong support for the week to come. Obviously, I could go wrong because the market could go up, as we saw on the chart. So if I go to the next, to the first adjustment. First adjustments, yeah, the market went down and I had to move back 2 shorts. No big deal. You see the market went down. I don't experience a big drop. I'm minus 1%. Nothing wrong with that. Just move my shorts a little bit back. And if I now take a view of the next few days, I'm still pretty covered on the downside. If I go to the next adjustment, on a Thursday afternoon, I think the market went quite further down. And if we look at the price chart, it was actually quite a downdraft. Down. So it was actually not an easy market, pretty choppy. And at the same time, you can see on the graph that it's okay. It's not making money, but it's still quite resilient. And this is thanks to the calendars. We are losing like 10, 15 points, but the Vega being so little, you don't have to stress. You're still under the tent. You come. We are now we are on 8 DT, and I realized that around 8. I mean, in the last day, 8 7 DT, and for those who are brave enough to carry it over the following weekend, that's where the acceleration of theta really kicks in. So if you're under the tent, you just go ahead and stay. I mean, there's not a problem. Being underwater for a while, you see that because of your bigger hedge, there's not much risk. You far from your possible stop loss, even though we've lost like 1.5% on that day. That's not an issue. So that shows the resilience of this trade. I think there was a sharp reversal. Yeah, sharp reversal the following day. We after losing 1.5%, we're up over 1%. What did I do? I started peeling off the debit spread because if it keeps going up, this spread will start losing money. So I decided to start peeling off. I actually also took off one of the calendars, and the position is still looking good. I'm still trading a very delta neutral trade, and as a matter of fact, there's nothing wrong. As long as you're under the tent, there's nothing wrong with maybe keeping it over the weekend. In this instance, Theta will go rapidly down if it goes up. So if I'm not mistaken, I chose to close the trade as per the guidelines. Yeah, I closed the trade. I closed the trade for just 1%, but it was not. If we look at the price chart, it was not exactly an easy trade. We started with a very low IV, so it was expensive, more difficult to craft, and then the market reversed and also on a little bit choppy. And if we remember, I probably also, of course, it's never position. I maybe also took the wrong view. I mean, I was starting with a 40-20 broken wing butterfly, not a 40-30. So I was probably more hedged on the upside than the downside. So maybe, as I wanted to show you, is that you can go through this position even if your market outlook is slightly wrong. Okay, let's go back to the presentation. Oh well, actually, I'm actually getting to the end of it. I don't know what the time is, but
we still have 10, 12 minutes, no problem.
Okay, that's good. I mean, it's a good time to come to an end and maybe take questions. So yeah, what I wanted to show is basically the way I trade a weekly position, a Rhino-like weekly position. There may be other ways to trade it. And there may be other ways to even look at it. I like to be almost like freestyle, very flexible. So the loose guidelines are just keep your ratios in check. You can have a different type of broken wing butterfly. It can actually be a kind of a baby Rhino RTT with an expiration line on the upside that is close to 0. So that you on the bull market you will be fairly safe, and you will probably not even have to adjust at all. And the way I look at it is that to me it's an edged put credit spread. Nothing wrong with looking at it differently, but that's the way I look at it. So it may not be suitable for all because the guidelines may look a little bit loose for beginners. But in my view, it's a very good learner trade. You learn a lot by training it, even demo for a while. And overall, if you look at the stats, it's still a profitable trade. I mean, you can play around with it, and make a little bit of money. And as experience comes, I mean, you will reach your 2-3% per week on average. So that's still 6, 8, 10% a month, which is not too bad. That's what I wanted to say. Yes, I can take questions maybe now. I actually already written some, and that will be obviously given in the presentation.
Yeah, there's not too many. Price asks, can you do the same strategy using a calendar instead of broken wing butterfly when IV is low?
Yeah, that's possible. That's possible. Actually, yes, it is possible. On the big Rhino, like I did on the Weirdo and other strategies, you can calendarize your butterfly. You can definitely move shorts or move longs up or down a maturity. You can have some of your shorts actually 7DT and let them expire very quickly. That's something that can be done. A full, basically a full double calendar or double diagonal. To me, that would be another trade because it will then be essentially Vega positive. So it can be done, but then I would have to look at different ratios. I would probably use a different ratio for Vega over Theta. Any other question?
Well, it looks like you've answered all the other ones in the presentation, like how many days the expiration do you start, etc. Okay. So I guess we're basically out of questions, but Bruno, you're planning on doing a service soon, and you said maybe starting this week or next week for like an extended trial.
I am going to start. I've actually already put some RTT type adjustments. Basically, it's very often just a reverse Harvey, bringing up the expiration line on the upside. Yes, I'm going to start with the September trade for the Rhino a little late. I generally start probably around 70 DT. As I said, the reason is that is twofold. One is that I was on holiday, and second is that I was waiting for a pullback because be it the baby or the regular Rhino, butterflies usually are cheaper when the market retraces a bit. That retracement has not yet arrived, so I've actually already entered some bearish Rhinos for October. And some for September, which I can actually show if we have a few minutes.
Yeah, we do. And while Bruno's pulling that up, I'm going to prepare a link that I'll send out to everybody to follow Bruno's alert service as it starts, which should be soon.
Yeah. Where's my September? Rhino. Probably not making much money. The market still keeps going up. That's a fairly safe trade. I don't know why it's so long to update with prices. Okay, it's coming. Data from IB is sometimes painfully slow. Oh, I'm starting losing money actually. I was up until recently. So this is a bearish Rhino that I've put for September. It could be a hedge type of trade on the downside. I wouldn't pretend to call it an STT, but it's a hedge trade, and I'm going to place the regular Rhino soon. So this is typically a Rhino which has been reverse harvested to have very little risk on the upside. And I still hope we'll have a retracement and by September make money out of it. I have entered a similar position for October, but maybe to stay in the topic, maybe I should show this week's baby rhino.
Hey Bruno, just a quick question on your alert service. Are you just going to do monthly trades, or are you going to add weekly trades as well?
Tom, we've discussed about maybe starting a weekly trade alert service, and then in the meantime, Brian has stopped, and so I think in the beginning I will do both in the same service,
Mm-hmm.
And maybe later on we'll split it.
Right. Okay. Fair enough.
So this is the current weekly, which is not doing too badly. Oops, what is that? Sometimes
Just click those arrows on the right in option view, and that should pull in the matrix.
Sorry, what?
Oh, if you go back to the matrix,
yeah,
you see those two little arrows on the right.
Now I was more concerned about the graphic. Yeah. So this is a rhino that has been adjusted a little. First, the put debit spread was narrower to be more protected on the upside, and then I moved my shorts up, so to follow the market. And as you can see, this is a trade that is again very much in check, very flat. It's a difficult week. It probably won't make a lot of money, but just to show that, as I said, in terms of ecosystem, this is a very resilient trade. And we are Wednesday today, so okay, maybe not Saturday, but this is my cover for maybe until Friday. -2 +3, to me that's good enough. Even though the potential for a big profit is not there, I will end up probably in my 2-3% like most weeks. So this is this week's baby. So yeah, I could show you my October trade and the trade I intend to put it for September, but that alert service is pretty new to me, so Tom will obviously help me to. But if you want to sign up for the trial, I will probably put my September trade before 56 DTEs, which is Friday. So it will be tomorrow, Friday. I will put on a Rhino. That may not be exactly Brian's Rhino, because at 56 DTE, to me, the delta is already getting a little bit strong, and I don't want to be hedged too quickly. So maybe it will start slightly different with the upper longs, maybe of a 2 strikes to have less risk on the upside. So basically, instead of waiting for a reverse Harvey, I will probably make it also cheaper, because if I take my upper longs 1 strike down, it will be cheaper, and because obviously I don't want to pay too much, and as it is the case when the IV is so low. Are there any other questions?
Just one from Al Geeson. Do you see that, or I can read it if you want me to?
Sorry, what?
Al had one question that I can read it if you like, or if you could just pull up the chat and you can see it yourself.
Oh, okay. Oh, of course. What does? With IV at almost 0 percentile, we enter broken market drop. Will Vega increase overcoming gains from Delta? Yeah, IV is definitely lowest. But again, I look at it as a Theta trade. So I'm not looking at balancing Vega with Delta like you generally do with a monthly broken wing butterfly. I hope that I'm answering the question, but really as a weekly, it's a Theta type of trade. I use a Vega hedge, and that's it. And as you've seen with the current baby and all the example I've shown you for April, the point is to keep your Delta flat, your Vega as flat as possible, It's a bit looser on the Vega side because the IV sensitivity is lower than the delta sensitivity, of course. But overall, if you know what you're doing with adjustments and you keep your delta flat, you can do basically anything you want, and even in this type of environment. It is not exactly my favorite environment either, but I've shown you with the current weekly that it's still possible to do that. It's still possible to make money in this market with a broken wing butterfly, basically, on the upside.
Now, Bruno, I know you're pretty strong with directional analysis and technical skills. Are you ever factoring that into your rhinos, or do you just trade it purely neutral?
No, I trade it purely neutral. If I have a little bit of a bias, it will be minimal. As I said, in the ratio, I don't really look at necessary starting delta negative or slightly delta negative, because usually you want to be Vega negative in case you have a drop and a sudden increase in IV, and because a typical broken wing butterfly is Vega, very Vega sensitive, you want to compensate both. But in this case, no. It's a Theta trade, delta neutral, Vega neutral, and that's it.
Okay, very good. One more question came in. How far below the money is your starting upper long?
Below the money. This is not a typical trade. I've done a bearish Rhino, so to say, RTT with a reverse RV right at the beginning, but that's not a typical Rhino. It's a Rhino for this type of environment. I've got a more bearish trade, which could be closer to what Ron would call an STT, where I placed the shorts just below 1 SD, and then you build your structure on that. So for monthly, it will be 50 points down for the lower long puts and 40 points up for the upper long puts.
Fantastic.
But generally, for a baby Rhino, the upper longs will be slightly above the money. Obviously, at this stage, we're waiting for some reversal, and out of the money, butterflies are cheaper, so I don't want to pay the full price, and so I probably move the structure one strike down just to get a reasonable price.
And Larry asked about the weekly Rhino. Occasionally, you have two different trades on at the same time. I think you mentioned that in the presentation. Just before you take off one, sometimes you have to put the next one on.
Yeah. But you can maybe peel off the first one if you have a capital issue. If we follow John Locke's teachings that you should use Reg T as your benchmark, and you should probably allocate as much money on the side, so basically up to 50% of your capital, you can momentarily overlap. That's just over a weekend. That's something that can be done. But if people don't want to overlap, that's not a problem. Especially if you are on a PM and your new position will probably take up nothing in terms of margin. I mean, the Reg T margin for a regular Rhino is less than 10, and when you start a new Rhino on the PM account, it's going to cost you maybe $2,000 to maybe $3,000 max.
Okay, well, I think that's it for the questions, and thanks again, Bruno, for spending time with us. Look forward to having your alert service. We'll get a link out to everybody for them to participate in the trial. It'll be the normal extended trial that we do for new services, probably 30 days, so you can get a feel for it before. Yeah, as long as it needs to be.
Yeah, that's not a problem.
So thanks again, everyone, and I'll get this recording posted as soon as we can. And thanks again, Bruno.
Thank you, everyone. Bye-bye.